John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys. Sorry, a little delay this morning. Was really trying to get this new version of the scanner out to you guys and before the opening, and was with the programmers, and I got frustrated and stayed on with them. So appreciate you hanging in there. And the previous 15 minutes was obviously a delayed recording from yesterday, but right now we're gonna hit it pretty hard. Take a look at the S&Ps. I was looking at the dollar. The S&Ps. This, if you kind of take it for what it's worth, everything we were saying earlier about some overextended areas, kind of difficult to go long up here. You are probably going to pass on this inflection point here for support at around that 2351 down into 50 and a half, that area, 2351 and a half. And as we look at this, what we're doing today, in my opinion, is just passing on that and just waiting. Again, we had some overextended situations on the breadth. Here's the top of the profile on the 240. That was the top of the profile on the daily. And again, we've had a good pullback this morning, but I think we've got to be looking forward to almost getting inside this box, getting a daily close inside the box, and then looking at the S&Ps with some kind of edge. Right now, I just don't feel comfortable getting long the S&Ps. And right now we've got to pay attention to that inflection point. Here's crude. Obviously, we talked about taking some weight off 5506 up there on the April contract. Really not a lot of edge here. Kind of had to wait and see for some different numbers to appear. So crude's kind of a pass too, but guess what's not a pass? Gold. This was the one we really decided there was some serious edge to this particular trade on that 1236, 1241 area, getting past those borders and then being in the ether. So I'm going to go back to the S&Ps and state, I don't think there's a lot of edge here until we get a daily close below that unfair high. So therefore, it's not something I'm looking at spending mental capital or physical capital on right now. And that's the way you got to look at trading sometimes. You don't have to be in these same instruments every day. You got to go to the ones where there's edge. This gold crude, same situation, but gold has been the trade with the edge. So now what do you do with it? I don't see any reasons to take off the long trade. All right, there's that bust down on the 240s and the weeklies and the dailies. We talked about green across the board on this particular product on the scanner. And why is somebody laughing out loud in the den? Okay, here we go. And that's the way gold is working right now. And we talked about a pretty good move up on gold based on there really being nothing around up here and trading in the ether. You do have an inflection point at 1262 on a previous profile. That's going to be something to pay a little attention to for short-term traders, but the long-term trade, I don't see any reason to take this off. The 10-year, we talked about, where's the edge in treasuries and starting to get some kind of, collective thoughts, if you will, on the 30-year and the 10-year, and blocking out the short side and talking about first-term targets on this at around 152.26 on the 30-year. I think this thing could actually go higher. The market coming off is actually, again, the 10-year and the 30-year have been sitting just, with this massive move up in the equities, not wanting to go down. And that coupled with some things going on, the golds of the world and some other situations really has blocked out the short side for me. So this has been a neat little trade. Here's the 10-year. And the 10-year now, busting out above these inflection points, 125.07. And that 30-year's got a ways to go, 152.26. Is that what we said? Just to reiterate some numbers here. Let me point that out to you. 152.26, that's your target on the 30-year. Not interested in going short these products. These are just, areas of support and taken off some weight on the long side. The dollar, we had talked about, waiting for this thing to get below and get a close below 101.20. Kind of had a little bit of a retracement up this morning. We got as high as 101.10. So again, these are long-term possibilities. Trump has just kind of sped up the rhetoric, the narrative, as the news channels would say, on how wrong it is for other currencies to be where they're at relative to the dollar, things like that. I think the dollar easily is going to get down into the 97s of the world, but right now you've got some good stakes in the ground to get back down into 127. That's the target on this initial trade. I feel like we're going to go much lower and revisit 99.63 bare minimum on this particular product. We're going to hit the NASDAQ really quick. So here's the numbers on the NASDAQ, obviously showing a little bit more relative weakness yesterday. 52.80, 55 is your target. That's the bottom of the profile. You know how powerful these things are, things to pay attention to. 52.80, 81. What does that mean? That means that you had the yellow bar on the long-term MO for the NASDAQ and all the other indices in the United States. That happened. It's time to take some off. When you start seeing hints of a new profile, this is the bottom of the profile. This would be your target to look at for support on the NASDAQ. You got to, I think, pay attention to where the S&Ps are at on this trade. I think this trade's probably over for a while. And again, we talked about where's the edge in certain products. It's not in the S&Ps right now yet. We need to kind of see a close, and sometimes that's the way it works. And remember, those closes are just, at the end of the day, that's where everybody has decided the price should be before the weekend. That's a big deal. All right, let's hit the silver trade here. Talked about this one just really being very attractive on the long side. I know we've had a big move up in silver since 1550. This is a very big move past couple of months. Don't see any cracks in the armor on this one. No reason to take the trade off. I think these things could run hard. I think gold could hit 1,300 in a heartbeat. I've been saying that. I hit the wrong button. What just happened? I think I just got out of the den. Daggone it. Let me restart something here, guys. Sorry about that. Let me make sure we're covered here. Restarting the... Here we go. Okay. Sorry about that, guys. Is everybody seeing my chart again? I hit the wrong button in the den and killed everything. Is everybody seeing my chart? Okay. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back. Aussie dollar, this one really disturbed me. Or as they would say on, what's that show again? On History Channel that puts you completely to sleep at night. The Curse of Oak Island. I love it when they get around, 5 or 6 of them get around and look at a small piece of wood, you know, and somehow get a 15-minute conversation about it. Anyway, that's... The Aussie dollar is just interesting. That's the word I'm looking for. 76.96. I really this one just totally blows me away that it's even coming off at all. I expected this thing to ramp up. Right now, it's kind of testing my nerve here because I'm not wanting this thing to get away from me. So I'd like to see it get back above 76.96. I know these are a smidget ticks below here, but. Doesn't feel right for some reason on the ultra short-term trade. The long-term trade, I still feel great about it. Here's the 240s. You know, the Aussie dollar is something I'm looking at as a long-term trade up to 80. So I'm trying not to get shaken out of this. So my short-term MO is breaking down a little bit here, but the long-term's still okay. And you know, if you're listen to me and I talk about a long-term trade, there's a lot of different ways to attack it. Option spreads, hedges, just going lighter because you can kind of suffer through the noise and not have a heart attack every day you wake up if it's against you. And I'm a big fan of not having a heart attack. So the dollar we talked about earlier, but I want to kind of drift right into the, and we mentioned all the numbers on the dollar. I want to drift right into the, and this one, you know, really, it's just case in point. Sometimes you have to buy things higher. I know some people might have been digging in lower, thinking the dollar was going to turn around and taking some shots. I just don't really operate that way. Sometimes I have to buy things higher. In this case, even after getting stopped out, and we talked about, let's just let this thing clean and clear 105.60 and some change and 85. And let me just give the numbers: 105.67 and 105.85. So now we kind of got that going. The dollar did its stake in the ground thing and is drifting lower. And the euro, in my opinion, may see 107.05 and even higher. And that even higher would be 111.41. If we get if we really get some momentum here above 107, I think we're going to just drift easily higher, because then the dollar will be breaking down some barriers too. And I'd like to see that happen. Let's see. Okay, here we go. All right, so just check the den every once in a while. If you guys have any questions, just feel free to always throw them out there or call in. The number to call in is on TFNN's homepage. All right, the yen, let's just hit this one. So we talked about staying away from this on the long side now, considering the dollar situation, and ultimately I think we're going to retest 111.67, 68. That trade kind of ended. Remember, wide profile, tall profile POC comes into play, and that's where we looked at this taking off some weight. The high was 114.96 and the POC was 115.17. So it got very close to that neighborhood, as you can see, and just backed off. What do I feel is going to happen here? I really feel that the yen is going to break through this now. I thought we had a really good opportunity on a spread trade versus the dollar index there, and that was great. But, considering what the dollar's doing and where the dollar can go, I don't think you should be thinking at all about nibbling on the yen down here on the long side anymore. This is, you got 111.68 and 111.94 sitting here as somewhat support, and we may have a little bit of a trade and bounce opportunity there, but I wouldn't get too in love with getting long the dollar or the yen right now. If anybody has any, okay, the number that I always forget, 877-927-6648. Let's look at the Canadian dollar. We don't talk about this a lot. Here's the long term on the weekly on the Canadian dollar, 132.90 is pretty serious lid on that. So let's just think about this for a second. This to me is a lot better relativity trade. And let me make sure of something here. Yep, this is the daily. Considering what oil's doing, gold, the dollar coming off. I mean, the Canadian dollar seems to have a kind of a disconnect right now into all those usual suspects, and there's not a lot of edge here. It's coming off significantly this morning. Somebody told me they were going to build a wall up in Canada now too. I don't know if you guys heard about that. Got so many crazies coming down from Canada to take advantage of our welfare system. Anyway, so that's, I don't see any edge here. In fact, it's kind of a weird relationship right now. So when I can't understand something, technically it looks like crap, but there's not a lot of edge there right now, so I'm staying away from it. All right, let's hit some stocks that we've been talking about that we had to have some cracks in. Let's see, Apple's trading 135.45 this morning. So Apple now is trading inside the box here. This is our daily. So how do you trade this? So we talked about, let's just kind of wait until we get inside the box to even start looking at this. It's hard to buy this thing up here, and I talked about not buying support anymore on this. 136.27, you could orient a stop above there. It would be nice if Apple just kind of rallied up this morning and kissed that thing, play defense above, and then you're shooting for 134.21. And I know this is like, a crazy situation for me to start looking at a contra trade, but some people could start taking some weight off the table, and 134.21 would just be a natural pullback kind of backing and filling in an uptrend. If you want to take advantage of that, you've got a good situation here to do that. In the risk reward, you don't have a big target here, but Apple could easily. Some people start taking some profits. 134.21 could easily happen, and the good news is you can orient stops now. The most important thing is you can orient a stop. How's that sound? Tesla. All right. So, talked about not buying support anymore on Tesla. That's what happened yesterday. We're going to talk about this again, but again, this is finally some technical damage in this great company that makes a ton of money. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out, and throughout the week when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And by the way, sometimes I don't guess people see me roll my eyes on the camera. I was just joking about Tesla making so much money. There's the eye roll. Just trying to make a funny there. But let's just take a look at Tesla again really quick. We had talked about not buying support on this. Here's a massive yellow bar happening now that started happening yesterday on get that daily back up here. Started happening on Tesla intraday. And again, that's when you go, whoa, all right, I got to put the brakes on everything now. Let's just wait. We talked about waiting. Let's get a daily close below 262.44. We kind of had that really cool trade there, but it did what it's going to do. Market's kind of topping out some of those overextended things we were talking about on the breadth calculations. Now we've got let's see where we're at this morning. Ooh, 251.80. All right, so even lower so we're down here. Technical damage started happening intraday yesterday. So, and that was a pretty awful sign to open up right on the unfair lows on the daily there. And then you have to just kind of wait and see. And this is a case, I was talking about the euro kind of buying it higher, which is just against every, I guess business 101 concept of marketplaces is buying something higher. But this is the same situation on Tesla, selling it lower. Having some clear signs that it's okay to get in the water. That was a scary little trade up there if you were trying to go short there. This thing is proven to blow people's minds. So, what do you do with it now if you're waking up? And now it's kind of in the hole. And 262, 266, that's been broken. It would be awesome if this thing rallied back up into 262.5 or 260, in that DMZ 262.5 up into 266.5. Then that would be kind of a classic, close below profiles, go back and retest that area. But if you didn't catch it yesterday, this thing could actually just continue to power down here. So let the market come to you. That's kind of the theme of that. Let's look at NVDA. All right. So this has been one. I think a guy called into the show. I think we were right in here around 60 and some change. And he was like, this thing's gone too far, too fast, blah, blah, blah. I was like, oh, no. There's no signals here to get short yet. And then we did a double in a couple of months here. So here's the weekly. That's a real good thing, blocking out one side of the marketplace until we have technical damage. And it is what it is. Things on their highs can go higher, folks. This is a great example. But right now, we kind of, had the new profile attempt to appear last week. We've explored the whole fair auction. We're trading 96.30 or some change right now. So we had a week. We kind of had that, not a weekly close, but we've had, as of yesterday's close, a close below that 101.29. Here's the daily on NVDA. So if you're kind of trading more intermediate time frames, and this is all in the scanner, kind of had to break down, go back and retest the top of a profile here. This was probably not on downtrend resistance custom sort, but if you're looking for situations like that, you can always go in. I was just looking at breakdowns yesterday on the close. You can always go in here and kind of look for things like that, like top, see what's kind of hanging around, bottom, top. If you're just trying to flag things that are on dual inflection point situations there, you can always find those here. Kimco, wow, bottom. Interesting. Been talking about that one. And, there was a nice little news flash that came out yesterday that I think allowed you to just, we're going to take a look at that in a second. Tom was actually talking about that sector. But what do you do with NVDA now? And we're trading again, looks like around 96 pre-market. You'd hope these things kind of would rally back up into, just like Tesla, rally back up into 101.29, 101.38, and then you could kind of feel good about getting short. Market had come to you pretty far in the hole right now. I wouldn't step in this morning and just start shorting it, put it that way. All right. SMH, somebody had mentioned that in the den. The semiconductor index. All right, so if you've been trading semiconductors, and again, I don't profess to a lot of times say that, the profiles are going to be like this target thing that always is there, and you know completely your risk reward. Sometimes those risk rewards are wide open. They're open-ended, because I use these things to kind of give me signs. As of yesterday, I mean, we started seeing this yellow bar here intraday, which is a peel back in the scanner. It's this type of situation. Let me just pull it up. See that little yellow peel back on the red? Those are indications that there's a new profile attempting to appear. So if I go down to, let me see here. If I type in, I think we've got this in here. Nope, we don't have SMH in there. It's an ETF. You'll see those glaringly in your face. So if I wanted to come in here and see, okay, what was showing new profiles here? These are the ones. I just choose yellow. I know which ones are attempting to put in a new supply area up top or demand area down below. There weren't a lot of them. Only 21 on the upside, 4.16. Probably have a lot more today. But the SMH was doing that yesterday. We're going to see a new profile in the opening here. So this was really the first sign that it was okay to start looking at taking some weight off if you have this on the SMH. So you're going to get some new inflection points to focus on SMH today. Let's take a look at KMI. I think yesterday morning there was some, kind of some news. I guess that somebody said in the den that somebody was stepping in some fund and buying this thing, and I think I was talking about that just gave you a really cool area to try to short this thing again. We went up to 21.81. It looks like that unfair high on the weekly was 21.93. And now we've had a daily close actually below. What in the heck? Below the daily. All right. A couple other stocks we wanted to mention of note. We're going to hit those right when we come back from break, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Welcome back to the show. I think we've got a caller.
Hi, John.
Marie?
It's Marie.
Hey, Marie. How you doing?
Good. I wanted to ask you about Sanchez Energy.
Okay.
I'm not in it. I've been just looking at it drift down here.
Mm-hmm.
And was wondering if it was getting close to a buy.
Well, right now, on SN, that's the stock. I've got it in the den. And last week we had a close below our weekly profile. So, you know, and this week we've kind of gone up and kissed it and started trailing off again. I would just look at this as kind of a wait and see. You know, we're kind of having some technical damage here on a couple of different levels, and I don't see that yet. I mean, if we get back above 1196, that would be cool. But if we also had another profile appear on the long, are you looking at this as kind of a long-term situation?
No, just a trade.
Okay. Well, I think there's some better opportunities out there than this one right now. That's kind of the way I see it.
Okay.
So it's sorry to say that if you're looking to punch the button here, but it doesn't look.
No. I was hesitating because I didn't think it was quite done yet. That's why.
I think you may be right. I mean, there's better things out there to look at than this one to try to get an edge. You know, like that. For instance,
That's okay.
Okay, cool.
Can I ask you a question?
Sure. Mm-hmm.
Johnson & Johnson, where do you see this thing going?
Okay, let me look at it. Mama. Whew.
Yeah, well, you recommended it a while back.
I mean, when it started kind of reversing back above 112, that was kind of cool there. And then, man, breaking profiles we talked about yesterday. This is kind of I wouldn't call it a long-term sea change event, but if you look at this relative to what has been happening, you know, it was a stock that was kind of eternally supposed to be shorted relative to what the market was doing, and then all of a sudden we kind of had some green shoots happening here above 112 in that reversal. And you know, do I think that the trade's over right now? I actually don't. You know, it's trading down a little bit this morning, like 120.44, but I mean, on a long-term to intermediate-term basis, there's really no reason to get out of the trade yet. I talked earlier, I don't know if you caught that, about I just kind of let, you know, new profiles kind of regulate the trade, whether I'm supposed to take some weight off or not. And you know, I think the market's overextended. That could play a role here in everything. But Johnson & Johnson, I don't see any reason to really look at this from taking any weight off yet.
Okay. Well, it was a great recommendation when you made it.
Okay. Well, thanks for saying that. I'm just trying. All I try to do is just give some edge to folks out there. I mean, there's a lot of different ways to look at relative strength, relative weakness trading. But Johnson & Johnson, that reversal was kind of powerful, rejecting, as Tom would say, that bottom inflection point. Anything else that you want to talk about?
I'm great. Thank you so much for your help.
You're welcome. Okay.
Bye.
Thanks. Okay. Okay, so let's do a little recap for 1 minute. S&P's, still kind of sitting around these support areas on the 240s and the daily here. I'd love to see this thing get some momentum and just close within the profile for the first time in a while. We've got a massive mega pullback, and I'm joking, in the S&Ps right now, but just kind of a wait and see. I don't see any edge trading the S&Ps up here. Gold, still love this trade. No reason to take it off yet. Guys, stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.